Welcome back, everybody, for second session. We've got two more to go. I'm joined today by Vince Carnes, who's a cyber risk specialist from Trend Micro, and his colleague Chris LaFleur is a global manager of incident response. I know insurance is a hot topic these days for a boring old industry. As we were talking right now before going live, I was lamenting a colleague of mine here in the Pacific Northwest dealing with a almost 70-page questionnaire coming from his insurance provider about all the controls that he had in place. And it kind of reminded me of the first session we had where we were talking about automating some of those processes and kind of having some adaptive learning and capabilities around it. Well, I'm going to keep an eye out. You guys have been fantastic in the audience with your questions and comments. Keep them coming. We don't have to wait till the end for Q&A. We can inject that into the conversation as you start to see things that are sparking curiosity or questions for you. Drop them in there. We'll get to the end and plenty of time for Q&A. So Vince, I think you're going to lead us off here. So I want to hand the talking stick to you while I go check out that Q&A section.
Well, thank you, Brandon. Really appreciate it. And as he mentioned, we're ready for questions as they come up, or we have some time here at the end for Q&A. My name is Vince Kearns, and I'm a cyber risk specialist here at Trend Micro, and it's a fancy way of saying that we have a team here addressing the cyber insurance market and how we can help our customers show cybersecurity maturity. And so. And that's really what the topic is today, is how can you show cybersecurity maturity to the underwriter in order to get the right policy at the right price and all the things and all the right terms of it. And so we've got some tips and tricks in the presentation today, and really just some general information to help you build the resiliency that you need to, A, to protect your environment, but B, to get that to apply and get the right cybersecurity insurance policy that's for you. So jump right in here. So cyber insurance is kind of I consider it the final leg of risk mitigation. So if you really look at buying security tools and security solutions, that's a way of mitigating risk, but you can't control the knucklehead clicking and on a ransomware or a phishing email, and so you've got to be prepared. And the best way to do that is to have that cybersecurity maturity and that final leg of risk mitigation. So that safety net, that if something does happen, the house catches on fire, you are prepared in ways that you may not be today. And again, some of the tips and tricks that we have can help in that regard. What does insurance cover? It covers, I heard that in another session earlier talking about third-party risk. So it covers first third-party risk, the downtime, the actual payment of the ransom. So really, the industry has matured to the point that if you do get a ransomware and you do have to have a claim, that they're very well suited to make sure that they can get you up and running as soon as possible. The two big ones, of course, are ransomware and DEC. And again, being prepared for those. You can't prevent, somebody clicking and you just, it's not, sometimes a lot of people say it's not a matter of if, it's when. And so being prepared for that is the best case scenario. So again, insurance, final leg of risk mitigation. So let's talk about what I've kind of mentioned some of the costs, and this is a claim study from my friends over at Net Diligence. And an incident on average these days is going to cost around 400, almost 500K, and that is inclusive of maybe the ransom, which you can see the average there, getting you back up to speed. So really, as you talk to your underwriter, understanding the terms, that if the house catches on fire, what is going to happen on their end, but also be prepared to talk about how prepared you are, that if the house catches on fire, what am I going to do about it? How am I notified? And then who do I notify from that? So it's super important that as you have those conversations with the underwriter, that it is a little bit of a checkbox. Do I have this? Do I have that? But it's also really just the preparedness and the ability to respond quickly when things go sideways. So let's talk a little bit about the evolution and where we were. So Brandon kind of mentioned about his friend with the multi-page application. Prior to about 2019, the cyber insurance market was, I call it's on easy street. The customers were getting good policies at really attractive prices. The insurance industry was selling a boatload of policies. Everybody was happy, and again, so for the customers, from the customer standpoint, having that final leg of risk mitigation, that if the house catches on fire, we're going to be able to stay in business. Everybody was happy. 2019 and the first half of 2020, ransomware, these just outbreaks of ransomware, and the claims went through the roof, right? And so the insurance industry made a lot of changes. They raised premiums. They lowered some of the things that were covered. They raised deductibles, and really the big thing that affects everybody in the audience is that they started putting on some security control requirements. Okay, so multi-factor authentication. I go through this in a couple of slides, but MFA, backups, EDR, things of that nature, in order to lower the risks, so they don't have to pay out as many claims. So what does that mean to today? So the claims, premiums, and deductibles, they've gone up. They've kind of leveled out now, and it's really just the market responding to, as you'll see here in a minute, the claims were actually down in 2022. Threats were not down, but claims were. What are we looking at for the future is really the carriers trying to figure out how to assess the risk in a much more efficient, effective way. And you understanding that, hey, you do have EDR, but is EDR deployed on everything? MFA, you have it, checkbox, but is it deployed 100%? Because I've seen several incidents where, yeah, they had MFA, but one server didn't have it. That was the server that was compromised, and it led to a complete the whole house catching on fire. So as you can imagine, again, I go through a couple of tips and tricks here in a minute to talk to your underwriter, but it goes back to showing cybersecurity maturity when you're talking to that underwriter. And but the other thing is, these carriers are going to start getting really good at assessing risk, or better than they are today, and because what they've done for the last couple of years has worked. So when you think about insurance, I wanted to draw a parallel to life insurance. We all are your health insurance, right? And these carriers, the same carriers, by the way, they're doing cyber. They have decades and decades of actuarial data that can predict with very high accuracy when Brandon or Vince or Chris are going to have health issues, to the point of even death, right? They have these decades of data. Car insurance, decades of data that they build their models on. In cyber, they don't have decades of data, and so and when there is an incident, it's very different than the last one. Whereas when you look at the data on car wrecks, they can estimate how much it's going to cost. They can't estimate the cost of a cyber incident to the accuracy that they're used to, right? And so the carriers are coming at it. They want to provide the right policy at the right price, but they're not going to lose money to do it, right? And so if you equate it to medical or to life insurance, you have to go through an application process. They swab your mouth to see if you're a smoker. So these types of tests, and when you apply that to cyber, they're going to run you through some questionnaires, some check boxes, and then they're going to ask you some more detail. I tell customers that it's okay that you have to be honest, right? And if you do not have that, if you're not able to say yes on that checkbox, that's not necessarily the end of the world, right? As long as you can say, hey, I understand this is a gap. And here's what I'm doing about it. They'll give you 6 months, a year to where you need to be, to where you can check the box as a yes. So drawing it to life insurance is really close, and it's the process and understanding that the cyber insurance carriers don't have the data that they're used to, when they're building their models. Here's a sample of one of these forms. You can see here the yes, no, and if you look right there in the middle, is EDR deployed on 100% of endpoints? And you can sit there and check yes all day long, as long as that's factually correct. But do you know how does the customer know how to take that telemetry data and do something about it, right? That's the half that they're not asking today. They will be. And understanding that how you use an EDR solution proactively, because at the end of the day, they went to an EDR mandate because of the telemetry that the sensors pick up. And if there's an incident, there's that telemetry data to go to, but that's all reactive. That is after a claim has been made. That is after the house is on fire. But the true value in an EDR solution is that proactive protection and being able to use that data to show that cybersecurity maturity. All make sense? Brandon, give me a thumbs up. Good.
No, that all makes sense. And something else that I came across in conversations ahead of today's event that I thought was interesting about those questionnaires. And do you have it on 100% of your devices? One of my friends was telling me that their broker was guiding them, like, look, be honest, because if we find out after an incident in our own investigation or through a third-party incident response retainer that either the EDR solution wasn't deployed or the machine wasn't patched within your window of policy, then our percentage of payout goes down depending upon how egregious it was. So if you were, 5 days late with a patch, it might be they only pay 80%. If you were 10 days late, they might only pay 50%. So I think being intellectually honest and forthright on those is going to be your best friend, because we know we can't get 100% with a lot of these controls. So just another piece of color commentary for you there, gents.
Yeah, I'm glad you brought that up, because another thing to look out for is what's called sublimits. So I've talked to customers who have had what they felt like was a $5 million policy. However, in the fine print, it said if ransomware is the cause of the claim, if you're only covered for $250K. So sublimits was another, when I mentioned some of the coverage changes after the ransomware outbreak in 19 and 20, that's another thing that you got to, that they've instilled to reduce their risk. And so most ransomware comes from a vulnerability that needs to be patched. So you're going to start seeing patching language, really definitive patching language in contracts going forward. And I don't blame the carriers. Right now, they're paying claims where the vulnerability, there was a patch for 150 days. They didn't patch it. A claim was made, and they're having to pay it. That language will be in the policies very, very soon.
Yep. Yeah, it's already happening. And I think to your point about the evolution of the industry, to kind of kick off this next session or presentation, I was doing some research this past week. It's super boring. I'm wading through a lot of industry reports in cybersecurity insurance, but a fascinating tidbit came out in, I think it was 2021 or 2022. I think it was 6 of the top underwriters actually paid out more money in claims than they took in premiums. And so they just got completely inverted with the risk picture, right? And so some friends of mine, as I was mentioning earlier, that were going for their renewals are seeing rising premiums, but the coverage is decreasing. And to your point about some of the sublimits being snuck in, and one colleague of mine in critical infrastructure, again, that's kind of been my background, they dropped him altogether because they said the energy sector now, especially with the conflict in Eastern Europe, is now a hot target, and we're getting out of solving for critical infrastructure insurance needs. And I was like, wow, they're just completely exiting the market. So can't wait to get into the rest of this, guys.
Yeah. The carriers are just responding to something. Again, they're used to decades of actuarial data, and with cyber, it's not. So what you kind of mentioned there is a loss ratio, and absolutely, the vast majority of carriers in that the second half of 2020, their loss ratios crossed to where they were most carriers lost money in 2020. Absolutely. So, because it only takes, think about it. If they have to pay out a $20 million claim or $5 million claim, how much premium do they have to build up to in order to make that up, right? And so, as you'll see, the claims have actually gone down, which we'll talk about here in a second. So, the evolution. So, from a improving your risk standpoint, the carriers are going to be asking better questions. You mentioned, Brandon, that the packet is this thick now. They're starting to learn their blind spots and by having these claims and fully understanding why, they're able to ask better questions, getting the customers to prepare better. I can't stress enough that if you do not have an incident response plan, I encourage you to get with us today, or we can help in that regard. But that's what the carrier wants to hear. And if I were you, I'd say it multiple times. According to our incident response plan, we're going to do A, B, and C based on their question. And it's just being prepared will get you the right policy at the right price. And then where we're headed is that live telemetry. What I mean by that is the ability not just to do an external scan at contract and renewal time, but what's going on inside the firewall, and how can we take that telemetry that you have, provide it in a way that the carrier can go, wow, all right, I see the risk. You can even have it scored, and based on how that risk goes up on a daily basis, if something like Log4j happens, or the Kaseya or SolarWinds attack, everybody's risk scores would go up, and the carriers would be able to know that. So that's where we're headed, is to some live telemetry instead of the one-time, once-a-year questionnaires. So speaking of live telemetry, the driving insurance, the Geico app, that it sits there and monitors how fast you're driving, how safe of a driver are you. Same concept with the live telemetry I was talking about from inside the firewall that you should be talking to your security provider about. Hey, and because of what the carriers are doing in reaction, hey, it took something major to happen. Loss ratios getting out of whack for the insurance companies to do something, and I think it's working. All right, I mean the attacks, as Chris will tell you here in a little bit, the attacks are not down. But the payments, the ransom payments did decline in 2022, and it's because of some of the resiliency improvements that customers are making. With better backup and recovery plans, the overall improvement of the security posture. The insurers going from just requiring MFA and backups to now EDR. Patching is coming. I think in the next 18 to 24 months, to get a decent policy, you're probably going to need a managed solution, so a second set of eyes looking at it. Meaningful law enforcement, it's really woken some of the people in the government up, not only here in the U.S. but abroad, and it's something that's absolutely impacting the payments going down. And then the last thing down there is, if you don't have a good security posture, you either don't have a policy or you're paying a lot for it. And so because they're excluded, you're going to see these payments going down, and they're not tracked. So, as I mentioned earlier, I've kind of mentioned some of these before. The EDR, it's now mandatory for every policy that I've been involved with since last summer, last August-ish. Multi-factor authentication, you won't get insurance without it. That was mandated by almost everybody in probably the 2018-19 frame. And as I mentioned earlier, having a plan, right? And if you don't have a plan, highly recommended to put one in place as soon as possible, and then be able to communicate that plan to the underwriter. And hey, I want to tell this, understanding your risk. Yes, that's a really good way for you to show that cybersecurity maturity that they're looking for. And the other no-brainer there, up-to-date software. Newsflash, SaaS solutions with the latest and greatest, with all the advanced features like behavior monitoring and artificial intelligence turned on, up to date. is going to protect you better. But also, if there is an incident, you're going to be able to isolate, find patient zero much, much faster when you have up-to-date software and, of course, patched software. So as the title bit, I wanted to draw it into the attack surface risk management story around cyber insurance. So everything I've talked about is about the attack surface and how you understand what your attack surface is and what do you do about it. So we consider it as, discovering it, finding out where your assets are, assess and prioritize the risk. So what we like to do is take all the vulnerabilities that we see in your network and prioritize them by industry. So you can sit there and go, look, wow, that vulnerability is in our network. It's being exploited. Because that's why when we see something exploited around the globe, we're able to prioritize that. So being able to know where the assets and be able to assess and prioritize the risk, and then of course mitigating it. So hey, that vulnerability, it's in my infrastructure. Oh my, it's been exploited. I need to mitigate that as soon as possible. So when we talk about attack surface risk management, that is kind of a couple minute description of what we're talking about, and it's really the fundamental part of your discussion with the underwriters. This is a structure that you can see from multiple security vendors, and making sure that all of these different things in the middle there are covered. And if you read through those, it's a understanding where your assets are for each of those categories. And again, assessing the risk for each of those can lead you to that security posture that they are looking for and can make you feel comfortable, or your CISO and comfortable going in front of the board saying, hey, we are ready. I have an incident response plan. I've got a attack surface risk management strategy that leads into zero trust. And the board will feel much more comfortable, especially when they get involved with the cyber insurance discussions. So, Brandon, any thoughts there? Because we've talked about all the prevention and what cyber insurance carriers are looking for with some a few tips and tricks. But any thoughts or questions from your end before I turn it over to Chris?
Yeah, a couple of things on kind of the IR plan. 2 points actually. I saw a couple of instances where the insurance provider or the broker themselves are providing those as a service bundled with almost like a free add-on, or you're getting the undercarriage spray and then upgraded floor mats when you buy, because they're saying, okay, one, they want to come in and they want to do a tabletop exercise for you and your executives. And part of this is to see how well you respond, which may or may not impact your premiums down the road. The other thing is they're not only helping you with your IR plans, they're providing a secure portal. So in the event that you have an incident, your plan is stored off-site, and your incident response retainer, which may or may not be also bundled with your policy, can then get access to that in an off-site and safe location. So I think there's some very interesting kind of bolt-ons to the market that are coming out, but they come with caveats, because in one case, a gentleman had purchased his IR retainer through the insurance company bundled. When the IR retainer was executed, he was asking for status to give to his board, and the IR folks said, I'm sorry, we can't do that because we're not contracted with you. We're contracted with the insurance company. That is their customer. So remember whose name is on that paper, because they weren't there for him. They were there to cover the insurance provider and to find the root cause, kind of that sliding scale on payouts. It's kind of like the old adage is that HR isn't there for the employees, it's there to protect the company. So just be careful of some of those add-ons would be what I'd say.
Yeah, absolutely. And hey, look, that's another advice that I give to customers is picking the right broker is critical, right? And in theory, a broker is there to serve the customer, right? And their job is to understand the needs for their cyber insurance policy and then go out to multiple carriers and get the best one for them. There's nothing wrong with you asking and making sure your broker's doing that for you. As far as the tabletop exercises, we actually provide some of those for some of the breach coaches, the law firm. But we find that our customers like it better when we do it. We do it for them. That way, there's no. We want a sticky customer. We want somebody to understand where their risk is, how it's scored, and provide some of that breach assessment tabletop type exercises for them. So I would encourage people to if you're interested in a tabletop, sorry, it's a fancy word for a breach assessment. Okay. And breach assessment is a boring term. Everybody's got one. So tabletop exercises are the new breach assessment. So I would encourage everybody to go to multiple sources, shop around on your tabletop exercises. And if your security provider doesn't provide one, maybe look at the broker,
but also, get a final report on the outcome, because that becomes essentially your proof to the insurance provider, and insurance providers now are requiring these types of exercises on at least an annual basis. And to the point also, you mentioned breach coaches and such, and ransomware negotiators and the like. I've actually talked to a few of my colleagues who are actually bringing in their third parties that are part of this. They're bringing in their outside PR crisis communications firm. They're bringing in outside counsel, the insurance provider, the IR provider, all to these exercises, in person or virtually in some cases, just to make it more realistic and to make sure that everybody knows who's on top and who's in command when the chips are down. So just another prevailing trend, or maybe a leading practice perhaps, that I wanted to throw into the conversation. And Chris, I don't know if that's kind of the thing that you're seeing from your perspective as well.
Yeah, so it's one of the tabletop exercises, and those events are actually, think of them like your disaster recovery plan exercise, right? You don't build a DR plan for your IT infrastructure without actually testing it, right? You're going to build it, you're going to outline it, and then one day you're going to decide, okay, here we go. We're either going to do a soft switch over, or we're going to do a hard cut over, and we're going to test it and refine it and find where it doesn't work and where it does work, right? And then move from there, refine it again, try it again in another couple months through a change window, and the cycle lives on. A lot of people need to realize that when you're dealing with IR, because of the changing landscape of what's going on, those plans can't just happen once a year or once every couple of years or anything like that. They have to be constantly revisited. I am actually one of the few folks that think that you shouldn't be using your IR plan on an annual basis and do just a single tabletop exercise. What I advise people to do is go find a red team. And when I say red team, I'm not talking about a penetration tester. I'm not asking you to go and pen test a surface vulnerability that may exist on some web server that nobody knows about yet. I'm talking about hire an actual red teaming team that's going to come in and act like the current ransomware gangs. Because a lot of people get pen testing and red teaming confused, because pen testing is a vulnerability finding. Red teaming is acting like a threat actor, and all a threat actor cares about is getting domain access. After they get domain access, the game is on, and ransomware is following within the next couple of hours. I always talk about it whenever we run into incidents and we walk into them blind. You can see the timetable here on the page here. It is a ticking time bomb. And what's funny is a lot of SOC teams as well, they don't have these IR plans in place, so they don't know what to do whenever they first find the breach. It's not if you can stop the breach, it's when you're going to get breached, right? And how are you going to respond to that breach? That is the important piece here. So you get breached. What's going to take place? Well, threat actor is going to proceed moving forward. They are going to evade detection. They are very good at it. Without an EDR or XDR solution, it's going to be extremely easier for them than your standard AV products, right? From there, once they have their foothold, it's a time bomb. Now it's whether or not you're fast enough to find not just the one backdoor, but the multiple backdoors they left behind. And a lot of folks don't realize it is that they use legitimate software these days. They use some malicious software to get started sometimes. They use phishing, social engineering to get the original foothold. They may use a quackbot. I'm a huge quackbot hunter on my team. We make a joke that it's quack season right now, and we're out here with our shotguns just blasting them out of the sky. Using a lot of quackbot. So that's a malicious program. But once that Quackbot is established in the first patient, I don't necessarily need malicious software to proceed forward. I can use the admin credentials that I may have harvested already, or I can use the tools that you as a IT infrastructure have already allowed to potentially run inside your environment. So just remember, when you're building your plan, you need to test it, and you need to kind of look at the SANS Institution's standard. I like theirs. This is the one that here at Trends IR team we follow. Preparation is one of the biggest pieces of it. Understanding and identifying is when things aren't normal, right? What are we going to do? What's our actions on containment? How do we know that we're going to take the right steps on eradication? And who and what is our recovery process? And one of the largest pieces of it all, outside of the preparation side, is lessons learned. What did we learn from this exercise, right? Whether it went all the way to ransomware, what did we learn? And it kind of goes back to that whole deal that you just said, Brandon, about like the IR firm is working for the insurance company. Thus, I can't share you what my findings are because it goes to a lawyer. The law firm holds on to it. Thus, no one ever actually gets to see it unless it ends up in a court situation, and then maybe it might get disclosed, right? There's a whole bunch of debate around that whole aspect of things.
Hey, I would like to interject here is that there's a misconception out there today that was very accurate a year or 2 years ago, in that if you've been popped, if you've had an cyber insurance claim, or you've had a breach, that you can't get insurance anymore. You can, but it's just a little more difficult. It's just like if you try to go get car insurance and you have 12 wrecks like Chris here, it's going to be much more difficult. But even if you've had one, right, it could impact it. But the lessons learned. So in a cyber event, preparation critical. And if you after the event, here are the lessons we learned. Here's what we did about it. Getting back to that cybersecurity maturity that you're communicating to the underwriter is critical. So for this audience, if you've had a breach and you think you're not eligible, you are. It's just, it's going to be a little more difficult.
You just got to show some mastery around this process here and what you're going to do about it. Okay. Thanks, Vince, for slinging out there that I had 12 wrecks. My car insurance is only due next month, so hopefully no one heard that. Let's go. So triggers to start. That's part of that identification piece. The rest of it I can't necessarily talk because it's your own business essentially, and you got to determine where it's going to lie. But these are some common pieces here of where you get that started, right? That incident response, that initial piece of identification. So data encrypted, obviously we really don't want to be there to begin with. If we're identifying a data encryption, the game is done. The threat actor got everything that they wanted. They've already stole everything. But CNCs, account compromise, those are the early stages of pieces of essentially of a breach before the data gets encrypted or potentially someone stealing data from you. That's about all that I got right here around it. I'm more than welcome to answer more questions about it, about incident response processes, things like that. Again, preparation, recovery, all that stuff is more of a business, it's a business discussion. It's not necessarily something that a third party with very little knowledge of your own individual organization can answer for you.
Yeah.
Right.
Yeah. So just one thing on this last slide, catching it quicker is better. Shocker, right? But it goes back to the preparation and that, that if the house catches on fire, here's my plan. Brandon mentioned that, having a plan offsite. Absolutely. Here with our customers, we offer one that's actually on a cell. It's all based on the phone. So if the server is inaccessible, that you can still reach your IR plan.
But I want to, yes. And I want to add one other thing, is what Brandon brought up about the third party IR company coming in for the insurance provider. By technicality, the insurance carrier and provider cannot force you to use their preferred IR vendor. Just keep that in mind, right?
Yeah, they usually have like a list of 10 or so that they prefer, but they can't force you to do one or the other.
Right. But just remember that if you feel like an IR company doesn't have your best interests at heart, and it seems like they're going more of the best interests of the carrier side of things to shift blame or, whatever it may be, right? Remember, carrier is like a casino. That's what me and Ben joke about all the dang time. Insurance companies are casinos, right? They know the bet, right? They know that the outcome is likely to happen. The question is how many times can I take your policy money before the outcome shows up and I have to pay out, right? So it's the same bet essentially. So just remember that if you are in an incident, think about who's your incident response team. You do not even have to use the ones that are on their preferred list. It may reduce the payout of the claim itself, but at the same time, if they do,
you got to be your comfort level.
Yeah.
So on the back end, and maybe I should have said this at the beginning, is that carriers, look, they want solutions in place, MFA, backups, EDR. They don't care whose name is on it. We've tried our best today not to say Trend Micro, but there's just no, there's no mandates or you don't have to use one solution over another. Do you have EDR? Yes. Is it on all the machines? Yes. They don't care whose name's on it. And so if you have any questions, hey, so Brandon, this is the end of our slides. Are there any questions, or do you have any thoughts?
Oh boy, of course, this audience isn't shy. I've got a few of them for you. Probably spark even more conversation. I want to go back. I don't know if you gentlemen saw this in the headlines, but a couple of my CISO friends were texting me pretty frantically with regards to the Merck case and the exclusions for warlike action or acts of war or nation state attribution. We all know attribution is difficult in this space, but the court rejected the insurer's point of view on warlike action. Any comments or thoughts on that? What do you think that does to the industry?
You want to answer it as the insurance guy, or do you want me to answer it as the IR guy?
So, are you talking about the one that happened in the last 2 weeks? The Merck?
Yeah, $1.4 billion.
It was my understanding that the ruling was that the insurance company was on the hook, and
that is correct.
Yeah. So, hey, that was they made a bet. They tried to put that language in there. Lloyd's actually won the lawsuit. I believe that was 2 or 3 years ago. Don't hold me to that, but that's where Lloyd started putting language in there about which exclusions. So It goes back to two things, Brandon. Find the right broker that you trust that can help you understand the fine print, and make sure you know what about sublimits, about exclusions, to better prepare yourself to not be caught into that, and to ask that question explicitly. That if I get popped with ransomware and it is from Russia, am I covered? And that is a simple yes or no answer. And so,
interesting point on that very thing. I was talking to a good friend of mine. He actually used to work for me years ago, and now he's a CISO in his own right. But he was saying, this was a couple of years back. He said, when you talk about act of war, like my house insurance is not going to cover an act of war. I mean, it's explicitly stated, right? When they're dropping bombs. He said, technically, we're technically still at war with North Korea. So if you have an incursion from North Korea, it could be considered to fall under that clause because it's technically an open-ended armistice treaty kind of situation. So I thought that was a very interesting take on it. But there are some other exclusions I think that are kind of sneaking in, and it's really around the contract language that's in your statements. And I know a number of organizations, especially larger ones now, are not able to get insurance from a single provider. They're going in multiple tranches and stacking their policies so that up to a certain level, this insurance company gets hit. Above that level, now you're starting to take on 2 or 3 other insurance companies. Now, we had a question come in from the audience about also at the end of the day, the underwriters kind of consolidate because now you've got the reinsurance market. Any thoughts on where that's going, that now we're getting concentration risk in our insurance providers, that if I get, in the case of critical infrastructure, say here in the United States being excluded, but what if it wasn't and they all got hit with a coordinated attack? Now you might sink your insurance provider.
Yeah, so
Actually,
Brandon, that is what keeps the insurance carriers up at night, is that one vulnerability or that one threat that impacts thousands at the same time. And that is absolutely a good thing to worry about. And we saw it a little bit with the SolarWinds and Kaseya supply chain attacks, where it impacted and Log4j impacted a lot of people at the same time. So valid concern. But if for each person on this presentation, understanding, am I covered for this, and explicitly asking about it. I don't think that first of all, the Merck case will continue to be litigated for probably 2 or 3 years. It took 3 years for the Lloyd's stuff to get litigated. So, I feel like if I'm a customer responsible for the risk and I'm looking at a cyber insurance policy, this decision is good, and that, hey, the courts ruled in the right way. And, I just don't, there aren't I haven't heard of a lot of cases where the carriers aren't paying. They are, because of the resilience is going up. Claims are actually down. Resilience is up. Customers are getting better at talking to the underwriter, so everybody's much more resilient.
the other piece to add on to there, Brandon, you touched on, was critical infrastructure, right?
Yeah.
So if multiple critical infrastructures do take place from the same threat actor, would that be considered an act of war? Right?
Right. Or not necessarily state sponsored, but maybe sanctioned or turning
guerrilla warfare is technically not state sponsored, right?
Right. Good point. That's a valid distinction too. I want to come back though to something from the slides. That safe driver discount and Chris's 12 accidents. Mark asks, with this kind of telemetry, I know I've seen this with the insurance providers bundling security scoring services, like a BitSight or Scorecard or whatever, in with their services, so that the insured can now go check their third parties. They also can point it at themselves, see what their own scores are as a way to reduce risk. That's great. But I'm sure that the insurance companies in the underwriting process are using similar bits of that same telemetry for their own calculations. And Mark writes in, what are we seeing? Are we seeing active scanning now going on? Are we seeing them ramp this up? Or are we starting to see more combinatorial information that's factoring into our premium price calculations?
Absolutely. And so, a lot of the scoring companies out there is an outside in view. So earlier I mentioned the telemetry inside the firewall. Kind of hard from an outside perspective to see what's inside the firewall and the telemetry that's impacting risk inside. So, my recommendation there is to work with a security provider that is able to provide you that inside the firewall telemetry that can be scored or assessed and scored, to provide that to the underwriter. So I feel like that scoring is definitely available but I consider inside the firewall to be more important than outside. But it's still, if you really want to show the overall picture of risk, it's both.
There are some carriers out there though that are actively looking for this type of hookup essentially inside these products. That way they can get this more real-time telemetry feedback. And what I've picked up whenever we're talking with them and stuff with these carriers is that they're not actually looking at the individual, but they're looking at more like a portfolio, right? Mm-hmm. So that there's a portfolio, and my risk is going to go up, up, up based off of these customers that are showing this thing. But you might end up with a spike, and basically that's the point of it, is to address the global, portfolio itself, to make sure that risk indicators stay low for them, protect themselves.
Yeah, and we had another question coming in saying, does a tabletop exercise reduce your premiums? It can, but it's starting to become a precursor or a requirement just to get the insurance to begin with, which I think is very interesting. And Charles, hailing here from Seattle, thank you for representing the Pacific Northwest like myself here, says, what specific types of information are companies getting asked for things like D&O insurance? Because I know a lot of CISOs, they're not on the D&O policy for the company, right? They're not a director in the legal sense that it imparts. And so they're looking for their own personal professional liability insurance. Any insight into what's going on in that market and what you're seeing other security professionals do to insulate themselves from the fallout?
Yeah, you kind of hit on that. It's fairly new. It's kind of where cyber insurance was 12, 13 years ago. But it's absolutely because now this risk is being, the IT guy who's obviously not a director, not on the board, but he's now can be in some. I've never seen it litigated, but man,
if he makes a mistake,
yeah, if he makes a mistake, he could be held liable, like maybe, but he could definitely get fired, right? And so I've seen some carriers offer personal liability claims. I haven't personally read the language, so again, with anything, a great broker is the answer, and getting them to help you understand that. But great question, one that I haven't really thought about much, but. Man,
I'll tell you, I go research it for myself because I run an IR team over here.
Yeah,
I'm thinking, man, what if my IR guys made a mistake or something, and Trend itself just said, "On this."
Sorry, Chris, you're on your own.
Yeah, exactly. You lose your job essentially. Now you got loss of wages, etc. Now, yeah, that's technically a problem.
I'll tell you, I was on the phone as a CISO with my CIO. We were in a conference room. We had the conference phone going, and we were talking to the insurance company. I actually asked them, I said, at what point, I said, do I have any liability coverage personally for the decisions that I make, about the organization's security on this? And they said no. And I said, well, can we at least get a rider in there that provides outplacement services and resume review for me? And crickets. They didn't even laugh, right? They're like, I think they were seriously considering it as a possible business model add-on, like the tabletop exercises and other things. So, question for you also: do third-party attestations help with this? You're giving them your PCI QSA attestation, a SOC 2 Type 2, getting ISO certified, because they're asking for things that may or may not be in those certifications, but it does show, one, a third party validating you, and two, some degree at least of self-awareness, even if it doesn't explicitly call out their requirements.
Absolutely. Everything like that helps, right? I mean, there's a reason for these classifications that you can show that's not necessarily the security piece of the maturity, but just that you have your stuff together, right? And it brings up that there are a lot of factors that go into the formulation of your price and your actual policy. Security posture is just one of them. It's an important one, but there's also, what industry are you in? How many records do you have?
That's one.
If you have a lot of patient records or just public records, you're more risky, and so that's going to come out in the conversation with the underwriters. In fact, it's one of the first questions now on these revamped applications is, how do you have patient records? How many? And that gets built in. The industry, your company revenue. They just look at a bunch of different factors. And one of those would be that, Brandon. Do you have the right certifications for your industry? And they have gotten better. Probably 3, 4, 5 years ago, underwriters didn't even know to ask that question. Now they're going, all right, you're in this industry, you need this certification, and they will absolutely go through that. I don't think it's a deal breaker, but it definitely makes your story better by having those type of certifications.
I will tell you that, just to address it, because you brought it up like a couple times now on the critical infrastructure. Those are OT environments specifically. Most OT environments are not ran by IT smart type of staff. They're ran by mechanical engineers that just happen to.
That's not a computer. That's a human machine interface. Yeah, I've worked with a lot of those folks. Unfortunately, gentlemen, we're at time. I want to thank you both for coming on and giving kind of both sides of this, right? The before boom and after boom side. It's been very informative, great conversation, but I got to cut a little short, so we'll be right back momentarily.